we are very, honored, and it's my pleasure that we have our leaders of Canadian regulators who are here. And I'm going to go through a couple of housekeeping points later, because I want to make sure that this is a small group, and we want to make sure that this is more of a dialogue, and we want to make sure that you are participating too. So if you have any questions, please jump in. But before I do that, maybe let me just begin by introducing our panelists. So I'm going to first start with the person on my far left, John Dexter.
Dexter John.
Dexter John, see? My first mistake. I'm sure you get that quite a bit.
Every day, twice a day. So don't feel bad.
You know what? This morning as I was driving my car, I was saying, I have to say Dexter John. And then you could see I should have underlined it. So Dexter John was appointed CEO of the Financial Services Regulatory Authority of Ontario in March of this year, after serving 4 years on his board. With over 25 years of experience in governance, risk management, and regulation, he has previously held senior roles with the Ontario Securities Commission and the Toronto Stock Exchange, and also previously served as president and CEO of Morrow Sodali Canada. Then, next to him is Tolga Yalkin. He is the CEO of BC Financial Services Authority and also serves as BC's Superintendent of Financial Institutions, Pensions and Real Estate, Registrar of Mortgage Brokers, and CEO of the Credit Union Deposit Insurance Corporation. Tolga, I don't know how you do your work, but that's a lot of responsibility. I'm sure you have a great team supporting you. Mm-hmm. He also previously served as senior in many federal roles, including assistant superintendent at OSFI and assistant deputy minister at both Health Canada and the Treasury Board of Canada Secretariat. Then, to my immediate left is Dr. Ryan Clements. He is the Director of Advanced Research and Knowledge Management with the Alberta Securities Commission, Chair of the Canadian Securities Administrators Financial Innovation Hub, and an adjunct professor at the University of Calgary Faculty of Law. He has advised governments on fintech, crypto, and securities matters, and served on advisory boards of fintech ventures. And again, we are looking, with his background, I'm sure we are going to talk about technology, crypto, and some of that. So again, as I begin my questions, my intention is that I'm going to ask a couple of initial questions to get a conversation going. But I would really encourage you to raise your hand. Madalena is somewhere here. She's here, and Yusuf is over there. They have mics. They will bring the mic over to you. And please stop me anytime, and please, this is your session, so engage in this discussion. So I'm going to just start initially, but just asking more of a general question. I know in terms of Dexter, you and Tolga, both of you are relatively new in your roles. Ryan, you have been in your role for about 2 years. So I just wanted to know, in terms of, tell us a little bit about what are your current priorities in your role? What are some of the challenges and opportunity that you see in your respective mandates? So maybe Dexter, do we want to start with? See, I said Dexter.
Yeah, right, there we go. Yeah, no, thank you. Again, thank you for everyone for being here. It's a pleasure to be able to speak to you. I think just to answer your question, FSRA's number one priority is consumer protection. Right? We need to do that, and that allow for innovation and competitiveness. The regulatory sector has shifted from a thought process of focusing on conduct and capital and solvency. We're now looking at more so focusing on more conduct, ultimately hoping to get more innovation, consumer protection, which also leads to more trust. And how do we want to do that? we want to really start focusing on better conduct against the entity that we regulate, much stronger conduct. We want to also look at looking at the auto sector and making that affordability. Thirdly, I would say being more proactive and on top of things in terms of climate change and technology. And then on top of all that, layering all that with a new approach with principle-based regulation in terms of being more collaborative with our stakeholders and the entities we regulate, and then making the public understand more trust.
Good, good. Tolga, do you want to?
Yeah. So very happy to. I'm going to go off script a little bit because when obviously I was preparing for this, I was like, well, I can share with you some of the priorities that that we are pursuing as an organization. Many of them, actually, quite frankly, that echo some of those that Dexter shared as well too. But if I were to take a step back and ask myself, like, well, what is our kind of our number one priority right now, and sort of think simply about it. I was reflecting on some of the conversation that we heard earlier this morning about kind of the environment that we're in, this environment of increasing and quite frankly accelerating volatility of incredible risk drivers. We talked a lot about technological disruption, but you have aging demographics, you have rising inequality, you have increasing physical risks associated with climate change. And when I think about all of those things, I think about what that means for us then as a regulator. And I think typically regulators focus their work on kind of one mandate specific thing. So like safety and soundness, like that's what we do, right? And I think we're entering a phase where the shocks that we see as a consequence of many of those risk drivers are going to be farther reaching, more frequent, less predictable, more impactful. And that's going to have very significant changes on our economy, our society, and ultimately the financial services sector. And I think what that means for us as a priority, as a regulator is, and we have been doing this in fact at BCFSA, we have to shift our perspective from being focused on, say, just safety and soundness, and ask ourselves, at the end of the day, if we do what we think we need to do right, and a whole bunch of other factors conspire in our favor, what's the outcome that we hope to achieve? And one of the sort of discussions that we've had within BCFSA is like that outcome really is, we want there to be thriving financial services in British Columbia for people to live their lives, to run their businesses. And so as we think about that, that requires, I think, us as a regulator to fundamentally transform, right? To transform our orientation from being focused on kind of one issue to thinking more broadly about, and we heard this again on the CRO panel, how we accept a certain level of risk ourselves in perhaps relaxing or compromising on what we thought should happen from, say, a safety and soundness perspective. So that transformation requires us to shift our perspective, shift our direction, change our culture, adjust our priorities. It has an incredibly transformative demand on the organization. So I think our priority over the next few years is really going to be, I think, shifting ourselves from being a very traditional regulator to one that has to think more pragmatically about how it not only pursues the risks that it has to pursue, but also supports some of the things that Dexter was talking about: innovation, the availability of services, the needs of consumers, the evolving risk landscape. So that's maybe at a very high level sort of my priority over the next few years.
Yeah, no, makes sense. Makes sense. Ryan, you want to?
Yeah, well, first, it's great to be here. I will start with a requisite caveat. I'm appearing on my own personal behalf. I'm not formally expressing the official views of the Alberta Securities Commission or the CSA, but I am happy to speak to the key priorities and maybe just taking up what was just said, kind of looking and starting from the perspective of when we think about the CSA priorities. We just published our 2025-2028 business plan, and you'll notice if you've looked at that business plan, there's 4 key core pillars that we identify. Capital markets, globally competitive and strong, resilient, effective capital markets, the evolving investor protection experience, technological transformation, and financial system stability. Now, to pick up on a point that was mentioned, when you start to deconstruct those 4 pillars, and when you start to look at the subcomponents of that, you'll notice that there's some tension in those actually. Because when we think about thriving, globally competitive capital markets, some of that involves accommodation for growth issuers. Some of that involves actually looking at our disclosure framework and saying, is there inefficiencies in this framework? Are there things that are duplicative? Are there things that maybe we need to scale back on? And when you start thinking about that, you might think, well, does that lend itself to investor protection issues? Our investor experience is very dynamic and evolving. The way that investors interface with the market, I'm not even talking about crypto, just period, is fundamentally different than what it was 30 years ago, 25 years ago. You have a huge uptake of do-it-yourself investing on order execution-only platforms. You have the rise of social media. You have misinformation. You have finfluencers. We literally have enforcement cases now on finfluencers. So we have all these dynamics that are affecting, and I can get in much detail in crypto if we had the time too, but we have these market dynamics which are affecting investors in challenging ways. So there, you can see this tension in here. And thriving, how do we achieve thriving capital markets? And at the same time, how do we achieve our mandate of protecting investors? That leads to our third pillar on this technical transformation. And the way that I look at it, I guess I can put my CSA Financial Innovation Hub chair hat on with this, is that we want to positively facilitate in a responsible way the uptake of transformative technologies into our market so that we can have globally competitive markets. But at the same time, we have to be aware of the challenges and problems that technology brings to the investor experience, including AI, deepfakes, other types of issues as well. So, for example, like within the Financial Innovation Hub, we've launched a recent test on data portability, tying in with open banking frameworks and trying to understand how data portability will work within the capital markets ecosystem. We have a forthcoming test on tokenization and looking at signal within that market. We recently helped to organize and publish the CSA's first ever staff notice on AI in capital markets, and we have an AI working group that is currently looking at that to not just to understand the positive uptake and how it can augment advice and maybe help, do-it-yourself investors, but also the challenges that AI brings. And then finally, on the financial stability one, there's a systemic risk committee that exists within the CSA. Staff in my division contribute to that. We also contribute to the heads of regulatory agencies, Systemic Risk Surveillance Committee. We participate on IOSCO, Committee on Emerging Risk. I think that I know that we're very, very mindful of the dynamics that were spoken of this morning about the changing risk environment. And as we think about the changing risk environment and how markets are continually shaped and influenced by geopolitics and geopolitical actors, well, what does that mean for our markets under systemic risk? Because historically, we have been looking back and looking to 2008 and looking to prior financial crises and thinking about things like counterparty risk and contagion and interconnection dynamics. But if we live in this very volatile world where geopolitical forces cause black swan events to happen daily, well, we have to be now assessing our risk modeling in the same way that the street is too, and looking increasingly at creative scenario testing and ensuring that we have real-time data and ensuring that we have the analytical capabilities to be able to understand those type of things. So it's a live and vibrant time, and we have some, they're not competing, but there are tension between the mandates that we have right now.
No, very fascinating. And again, I'm going to just ask this question to Dexter and Tolga. I guess as you were talking about your priority and you being new, maybe how did you get that message across your own organization? Did it involve maybe as you worked with your people, did it involve some additional messaging, training, maybe change in some of the individuals? So how did you go about doing some of that?
I mean, yeah, it's a great question, right? So it's fine to say the kind of organization we need to become is one that is focused on, producing this outcome that we hope, or this vision of thriving financial services for British Columbians. But how do you actually get there, right? How do you take an organization and shift it from being a more traditional regulator to one that perhaps has a bit of a different orientation? And the only way to do that, and from my perspective, is to look at the fundamental components that make any organization do what it is, do what it does, like its structure, its culture, its leaders, its processes, all of those sorts of things. So even as we developed, for example, one of the things that we did with staff is we engaged them in a discussion about our vision. So what do we think is an important, compelling vision for us to be focused on as a financial services regulator? And it was really through that ongoing discussion that this vision of thriving financial services and our role in contributing to it really came about. And so that is one of those things that you can kind of like build cultural momentum and an inclination and an orientation in the organization towards a bit of a different view than perhaps existed prior to. The second element is, I think, is just like how you structure the organization. Dexter and I were just talking about it at the beginning. We introduced some structural changes, and I know this is a little bit kind of, I guess, sort of a question of like how we're managing as an organization, but we had a highly sort of siloed organization where accountability was diffuse across a number of different senior leaders. And what that does is that means that when you're actually trying to achieve a particular outcome, everything depends on sort of CEO decisions at the end of the day. So we streamlined our organization rather than having, I think there was something like 6 or 8 direct reports as you counted them to the CEO, where I came in and I constantly felt like I was kind of tiebreaker for the disagreements that would exist deeper within the organization. We focus those accountabilities on 3 key senior vice presidents now in our organization, which makes a big difference. So it's really it's a focus on how do you shift an organization through its leaders, who you choose for those positions, whether they share that vision, bringing the organization forward in co-developing that vision with them and making sure that the culture is reflective of it, and of course structuring the organization in a way that helps you make progress overall towards the vision you'd like to achieve.
Dexter?
Yeah, no, thank you. I'm giggling because you're saying a lot of things that I myself had to deal with. So I think I have a bit of an advantage over most, no, not over most, but in terms of how I got to where I am. So I sat on the board at FSRA for, you said 4 years, I thought it was only 3, but we can fact check that later. So by being in that position, I was able to see where the organization was going. And whether I agreed or disagreed at that point in time, when I joined as a CEO, I already knew I inherited an amazing group of people in my ELT. Yeah, we made some changes there in terms of just where the vision is going, but ultimately I'm very collaborative. So my whole thing was just to communicate with my team, change the culture, make sure everyone understands what it is now. A few of my ELT members and senior staff and a board member is here in the room right now, but I think it was really important for us to align. And I think it's important, as you said, Tolga, that whatever that vision is, if you don't have buy-in across the board from everybody, it's not going to work. And then therefore that forces you to either you make changes yourself or people will self-select. But I think at the end of the day, once you are very clear what that is, in terms of FSRA, what we've been going through now recently is that we just literally had a strategy session. So talking about the strategy for the next 3 to 5 years and really focusing on what we think is important. I may have mentioned a few of those things, but in terms of just regulation, our principle-based approach is what we want to start focusing on. We don't want to be too prescribed any longer. We recognize the world is changing. We're recognizing that we want to have harmonization and less red tape for those that we regulate. So now thinking where we want to go with that is more so on principles-based, outcomes-focused. And that's where we're, as a group, we're all aligned behind that and just trying to move that forward. Still early stages, but we're definitely going that direction.
Can I comment as well too on that? Because one really interesting, I think one of the things probably folks often ask regulators is prescription versus principles, right? And we often say we're principles first or principle-based regulator. And we've been having really interesting discussions within BCFSA around how we believe we are and we should be a principle-first regulator. But it's an interesting nuanced balance, because one of the things we've been thinking about is the more prescriptive we get, the more, in a sense, that has this perverse effect of de-responsibilizing the very folks that we hope will take an active part in managing the risks for the financial institutions that they are a part of. So if we prescribe things in our guidelines and we say you have to do this and this and this and check this box, it actually creates this false sense of comfort sometimes on the part of folks who work in financial institutions, perhaps, that like, as long as they tick these boxes, they're good, right? And that's like the opposite culture we want to help support them in giving effect to within their own organizations, you know? So there's all of these really interesting dynamics to unpack when you think about how to pursue and the importance of pursuing a principle-first approach.
Yeah, no, I think that's a good point. And as a former chief risk officer, I could remember many instances of, you know, when the front line is saying, well, I followed your policy, but a policy can only, you know, sometimes not cover everything. So you also want to say, well, did you use your common sense sometimes? And did it make sense?
Well, and the other important part of it too is, I used to say this at OSFI, but I wasn't very popular when I said it. So I'll tell it to you all here. But I used to say things like, too, we have a guideline. It is a guideline. It's not a rule, it's a guideline. So to the extent that you encounter a financial institution where they have not followed the guideline, the next question is, well, you agree that this is a particular risk, how did you approach it, right? Because OSFI or BCFSA or FSRA, we don't have a monopoly on the best way of dealing with every particular risk. This is the nature of the changing environment, right? Things are developing all the time, and we learn things from the financial institutions that we oversee as well too. And so the thing I like about thinking about guidelines as useful tools to help financial institutions manage risk is that there's always a possibility that someone has actually come up with a better way to manage it. And we have to be open to that. We have to be willing to accept that there are different ways of thinking about a problem than maybe the ones that we think on balance make sense 90% of the time.
So maybe I'll come back and to one question, and then maybe for audience, if you can start thinking of something, and I'll reach out to you. So I guess, you know, we all talked about some of the things that were discussed this morning, the different risks. So I'll ask each of you in terms of the institutions that you are regulating, what's top of your mind? What kind of risk are you worried about? And how are you trying to make sure that those are being addressed? So maybe Ryan, I'll start with you.
Sure. So I'm going to start actually not in relation to the institutions, but the investors themselves. So, and then I'll identify an institutional risk that I see. Investors have an evolving experience with the market. And so it has evolved in a significant way, as I mentioned. But for the most part, you have a large number of retail-based investors who do not have financial advisors. They are not going through the normal financial advisor suitability, know your client, know your product process. They're using what we call order execution only platforms, so trading apps effectively. They're seeking out information on their own self-help. They're seeking out information from YouTube and from Reddit and from wherever else the information comes. And so I see a risk right now in having a large segment of the market potentially subject to misinformation, to financial influencers who haven't gone through the proficiency and registration standards that we have for registered financial advisors, to AI-driven misinformation, to investor herds catalyzing on Reddit and other types of threads. We heard this morning loud and clear that misinformation is literally a geopolitical strategy. And we've also heard loud and clear that markets are shaped by geopolitical actions. So markets move based on geopolitical actions. Geopolitical strategy is to engage in tactical misinformation. So I think, well, there's a large group of investors who are just going to be ebb and flow to this. And so what do we do with this? Is this something, and I can tell you we are investigating this. We have live engagement on the advice in the DIY channel. Ciro just published a paper. We've had conversations indirectly. We're thinking about finfluencers. We have an AI working group. We're thinking about can AI be deployed? In what way? In generalized advice and suitability advice, we have to be conscious of fairness. So if we allow certain types of advice in the order execution only channel, but they don't still have to go through the same suitability, know your client, know your process. Well, now we've created an unfair, unlevel market too, where we've given better accommodations to that channel than the historical channel. So there's these considerations that we're thinking about. But what kind of overlays this consideration is I guess I would describe it as new pathways for investor harm. And this is in addition to the historical pathways for investor harm. Pump and dump, short and distort, problematic promotional behavior, all of that stuff still exists. And it's amplified by social media, and it's amplified by quick execution on trading. So that I think about a lot. I think when it comes to institutions, there's a lot of risks. I do think cybersecurity risk is a significant thing. Institutions, including ourselves, are looking to optimize insights from data. And so we're pooling data, we're cleaning data to ensure that we have good data that we can rely on for a variety of insights. And this isn't just the regulator, this is every single institution, but what's happening via that is data has an information and an operational component to it. As soon as data is pooled, it becomes desirable by bad actors. And so I think every single institution needs to be thinking about cybersecurity controls. And actually in our financial stability column within the CSA, we are thinking about standards in relation to cybersecurity and disclosures.
Yeah, so I love this question, and I'll say I was just thinking back actually to when I was at OSFI, and we would issue the annual risk outlook, and like in a matter of 2 or 3 months, the risks that we thought were not the risks that we continued to think, and it was a reminder for myself. I remember the superintendent asking pointy questions. Why did we include this 4 months ago, and now we don't feel like it's a risk anymore? And one of the things I remember thinking at that time is we don't think about like risk. We don't plan like our response to risk and think about risks to be right. We do it to be ready, right? Mm-hmm. So these are exercises, right? We heard about this on the CRO panel. These are ways in which to incline our minds towards the type of things that we think may occur. That's the first thing I'll say. Second thing I'll say is just in moving from OSFI to BCFSA, which is obviously my current role, 2 things struck me as really interesting and different in terms of how I now see risk at BCFSA. The first thing was, I don't know if this is your experience with market conduct, but I didn't have any, OSFI is not responsible for market conduct, right? That's the FCAC. So when I started at BCFSA, I started to ask questions. So like, what are the major risks from a market conduct perspective? And the prevailing approach when it comes to market conduct is it's just a complaint-based, at least for us. I wouldn't even consider it risk-based, it's complaint-based, right? So people submit complaints, we process them, we respond to them, we deal with them. So I think actually we have a big exercise to go through in asking ourselves, how do we make our approach to market conduct truly risk-based and identify for us and also for the sector that we regulate, what we see as a major risks that include market conduct risks. So most of my perspectives on risk are prudentially focused as opposed to market conduct focused. Second thing I'll say is, again, moving from OSFI to BCFSA is what the risks are depends fundamentally, I know this is obvious, but depends fundamentally on what it is that you're looking at, right? And the financial institutions in BC, the kind of risks that they are subject to, like the credit unions and insurance companies that we oversee and pension funds, they're very different to the sophisticated risks that federally regulated financial institutions are subject to. So some of the risks that I think are front of mind when it comes to PERFIs or provincially regulated financial institutions may not be for Canada as a whole the major risks facing the financial system, but nonetheless I think are the most critical ones right now for the provincially regulated financial institutions in BC. So there's kind of 3 that come to mind. The first is interest and housing, RESL, like those are 2 financial risks that like are at the top of my list. The second I would say is climate. Interesting, not transition risks, because query whether or not there will be a transition anymore, but the augmentation, I would say, of the physical risks associated with climate change. Like we are seeing increasingly in BC and around the country for that matter, increasing unpredictability and significant losses associated with Nat Cat. So that's another preoccupation. And then you mentioned it as well too. Cyber is a big preoccupation from our perspective when it comes to risk. And I'll just say just about AI, often people say, are you worried about AI risk? And one of the things that we've sort of done is we thought about AI as a risk. And we kind of said to ourselves, AI, we don't right now consider AI a risk. It is like technological change and disruption is a mega trend. It's a risk driver, right? So when we look at the risks that we're currently preoccupied by, whether it's model risk or cyber risk, we ask ourselves, how is that mega trend or that risk driver of technological change changing the fundamentals such that this risk is going to be more impactful, more likely to manifest, et cetera, et cetera. So we're seeing AI through the prism of the existing risks that we were already focused on. And I think that makes sense for us right now because there's so much uncertainty around AI, and we haven't even talked about quantum computing, that it's very hard to say, well, what is the specific bespoke risk for this technology? It's much easier right now for us to see it through the lens of our pre-existing risks.
Yeah, no, I think I'll look at it from the consumer perspective, consumer protection perspective, which I would say for us at FSRA, our focus and my focus at night that keeps me up is on the risk side, is any form of financial uncertainty will definitely have an ability to destabilize the financial services. So for us, I would say the 3 areas I would say that we focus on is our credit unions, auto, and pensions. And I would say in terms of just preparing for the risk from that perspective, it's more so how are we mitigating this? What are we doing in terms of figuring out how best to deal with the data that we get from that? So for example, with credit unions, we have a platform, EDC, where we're getting a bunch of data, we're analyzing, aggregating it all to help with risk management in that sector. And then we produce a quarterly document whereby we share the information with the sector so they can see how they do against their peers, but more importantly, opportunities for them to recognize how we can utilize capital better, whether it's solvency or whether it's opportunities for corporate actions. In terms of auto, the concern we have there is, when things are tight in the marketplace, fraud. So we're implementing a fraud reporting service that will be coming out in the near future, whereby we'll be able to aggregate that information to the public, understand what it is, and then making sure that we prepare our sectors on how to avoid that. And I would say in the pension side is more so us focusing on mitigating any potential loss in the pension industry. So making sure we're stress testing our PBGF, which is our pension benefits guaranteed fund, and ensuring that that can withstand any blips in the market that may affect them. So from that perspective, we're really focusing on the risk management and making sure that we're getting the data and analyzing it and getting it out there for them to be able to be more, as I call it, future ready.
Yeah. Very good. Okay, so maybe I'll open it up if anybody has any questions. I have quite a few others, but I want to give all of you a chance and make sure that we engage all of you in terms of anything that you have in your mind. Okay, we'll go ahead. Madalena, do you want to come bring the mic?
Hi there. Thank you all very much for all of your comments and insights. I guess I would just love your thoughts on, I'll call it a national view and a national effort in regulating financial institutions. All of you, sound like you regulate the same financial institutions, just obviously separated by provincial barriers. And as we think about Canadian productivity and Canadian competitiveness on a global stage, maybe just touch on how you're working together and harmonizing that across the country.
So maybe if I could add to it, because that's
a question.
in terms of, if you can touch on that, and maybe, what are some of the gaps that you believe needs to be addressed? And I know, Tolga, you made a speech recently about the whole harmonization. And maybe there are areas where we do not need to harmonize. So again, any views? So maybe
Sure.
Ryan, we'll start with you.
I'll start because with CSA, we're not a prudential regulator. We're a securities regulator. So, but unlike the Americans, we don't have the jurisdictional divide between securities and derivatives. We regulate securities and derivatives, which has allowed us to be a lot more agile when it comes to things like crypto, for example. But I hold that off for now. With respect to the national, I taught securities law for 10 years. Like, I'm not going to get into the 2011, securities reference and the Supreme Court and said national system doesn't work, cooperative system does work, and here's the cooperative system, but Alberta and Quebec, we're not going to go forward with that one. So what do we have? Well, we have the CSA. CSA has been in place. CSA is an umbrella organization. It acts as a harmonizing body. There is a policy coordination committee at the CSA. The chairs are actually meeting this week on this. So policy matters, guidance, new rules, new instruments, it all happens at the CSA level. There's a commitment to harmonization. We work very closely. I have every single day meetings with counterparts across the province. We are very, very committed to harmonized policies. And for the most part, they happen. We do, to get to your point on, is there value in regional differences? That's an interesting question. I would suggest that there is, and at times there's a need for adaptation locally, understanding certain market segments. Being able to, and maybe I see it more wearing my cap as the CSA Financial Innovation Hub Chair, because we've recently put into operation an initiative that we're calling the Collaboratory, the CSA Collaboratory, which allows staff in jurisdictions to champion themes, to engage in thematic testing, basically, group-based thematic testing. So data portability, that's a theme. Tokenization, that's a theme. AI. But it allows on a champion model where individual jurisdictions can move forward a proposal, move a little bit faster, engage quicker, other jurisdictions can opt in, and then we're all committed to sharing learnings and sharing data between us. And so I think that allowing for entrepreneurial ethos, agile thinking, that's an important thing too. And we don't want to forget about that in the system. But when it does come, CSA Financial Innovation Hub is not creating new rules, not creating new policies. We're engaging with the market, we're getting feedback, we're engaging in pilots, we're testing. It can lead to potential guidance, but it's not leading to new rules. So new rules are going to run through the mechanism of the CSA process, which we're looking for harmonization. We also have harmonization efforts through our engagement through our passport system with having principal regulators. So there's ways that system can be improved too. But I guess I'll just finalize by saying, it's not, this is verbatim out of our business plan, but it's truly believed, behind the scenes. It's not just something that we say, it's something that we truly believe. And I think if you've worked in one of the provincial securities regulators, you'll know that it's true, because we take a lot of efforts to ensure that we have a harmonized approach.
It's a great question. Maybe I'll say something controversial, which may also raise questions about my own job, quite frankly, which is the reality is if you asked me, if we didn't have our system today and you asked me to create a system for Canada, when it comes to financial institution oversight, I would never conceive of a system where there are individual provinces overseeing financial institutions in the provincially regulated financial sector. But I think it is the system that we have, right? And so then the question is, how do we use that system as effectively, as efficiently as possible? And I think that's where harmonization is really, really, really key. And I think Raza referred to some remarks that I made around harmonization, because I think we do need to think about it, and we need to think about it in a little bit more of a sophisticated way that allows us to make better progress towards it. And so, you're welcome to have a look at those remarks, but I set out a bit of a framework in my mind for how we can think about different forms of harmonization and when they might make sense, and ultimately how to pursue them. And I also think too, if the vision that I sort of articulated at the beginning of what we want to achieve overall as a regulator operating in this space is something that folks feel energized about and that we pursue, it naturally follows that some form of harmonization makes sense and will actually serve British Columbians and also Canadians more broadly. And so I think we have to be careful. There's always a tendency is where you sit is where you stand. And when you are in a particular place, you think there's unique circumstances of the BC consumer or of this or of that require a different approach, which is subtle but critical. And I think we actually ask ourselves questions like, is that realistic? Is that truly the case? You know, do we really need to differentiate ourselves in this way, or can we accept as good enough an approach that is a little bit more uniform across the country? The second thing I'll just say in closing as well too, though, is, and I said at the beginning, maybe I wouldn't choose this system if I were starting with a blank page, but it is a system we have, and so we have to figure out how to get the most out of it. One of the things that we're actively thinking about also at BCFSA is, given this is the system that we have, yes, uniformity is good, but sometimes uniformity can in fact raise the bar too high for everybody across the country. And are there ways in British Columbia where we can actually perhaps be a little bit more flexible in terms of what we expect from financial institutions, to actually create an environment where we can manage that risk appropriately, but it allows more creativity and more innovation than a kind of an across-the-board uniform approach aligned with all other regulators would present. So I just think we have to be thoughtful and pragmatic and challenge our assumptions about it as we move forward and try to get the most out of the system that we currently have.
Mm-hmm. So, I mean, I agree with both of what you said. I mean, obviously the passport system works for the securities industry. Obviously, we don't have that here yet. Mm-hmm. But I would say that what we're trying to achieve, and Tolga will tell you, we actually have conversations, myself, my counterparts in Quebec, on how we can try to harmonize. But, and ultimately harmonization does reduce burden. But the real issue, and I don't think we really said it, is that some of the things that everyone wishes us to do cannot be done. We need legislative change, right? We don't have that power. Right? Those are policy issues where we cannot do anything about that. Having said that, though, there are other obstacles. Like, we have privacy laws, right? Yeah. I mean, FPUB and PIPE, if I'm correctly, those things need to be amended to allow us to share that type of information with each other. Otherwise, we're here working and sometimes feel that we're swimming upstream. We all agree that this needs to occur, but we also, appreciate the Bill C5 and what it's meant to do, but maybe a little bit more thought behind it, and then allowing us to have better conversations in advance to figure out how this can be done would be more achievable. So, I mean, we really do understand that this is important, and like I said, reduces burden, but until we can knock down some of the other barriers that are in front of us right now, it's a work in progress.
And just one more point on the harmony side. It's not just it's not just harmony between, analogous agencies. So between provincial prudential agencies or provincial securities agencies. The other harmony piece that I find plays out, because I spend most of my time in fintech space, is are we in harmony with international regimes as they're being created? Well, here's what happens in that all the time is, we serve on GFIN, Global Financial Innovation Network. We participate, extensively in IOSCO, but we'll go to a GFIN event and we'll meet with FCA folks from the UK, and they'll talk about, a crypto structure, or they'll talk about, MiCA that we're hearing from EU or whatever, and we'll say, yeah, but you're an integrated regulator, so you're national prudential plus securities. And so that requires us as securities regulators to communicate with OSFI and communicate with Bank of Canada and FCAC and to ensure that we are in sync. Now, we have a mechanism for that. We have the heads of regulatory agencies. Some of you may know about this. I serve on the digital asset group of the heads of regulatory agencies. We also have the systemic risk surveillance committee of the heads of regulatory agencies. So there's increasingly efforts in Canada to kind of bridge the divide between the provincial statutory agencies like the ASC is and the provincial prudential regulatory agencies, but also the Section 91, the federal agencies coming together at a top level to integrate our policies together for things that don't cleanly fit in just one or another. And a lot of stuff in the fintech space, like open data, not just open banking, consumer directed finance, but open finance, open data, stable coins, other types of crypto offerings don't cleanly fit necessarily just in securities or in federal. And if you look to other regimes like MiCA, like things that are coming out of the UK, they're using integrated approaches. And so that creates an impetus for us to communicate often with our provincial and federal counterparts that are in different agencies.
Yeah, I think I see that practical example of you guys being together and then talking about how often you talk. And I know we have legislative work to be done, but whenever that somewhat changes, and if at all, But I think what you have been able to do is by making sure that you are talking to each other, leveraging best practices and looking at things on an integrated basis. I think that's a really good outcome. Any other questions?
So my question is, a few weeks ago, the Department of Finance released Canada's National Risk Assessment. So it provided an overview of the money laundering and terror financing risks facing the country, and a lot of your regulated entities are highly vulnerable, so securities, credit unions, trust and loans, insurance. How has that impacted or influenced your respective mandates, and how does that influence how you cooperate with the federal government?
I'm happy to kick it off, of course. When I think about the kind of major risk drivers or mega trends, to me, financial crimes is right up there, and that obviously translates in a whole bunch of ways: terrorist financing, money laundering, all sorts of different elements of it, and so it's a really interesting one for a regulator like us to figure out. What is our role in this space, given the fact, obviously, that there's FINTRAC, our national money laundering regulator? And I kind of think about it very similar to the way that we sort of thought about it when I was at OSFI, was FINTRAC has oversight over money laundering and counter-terrorist financing. Our job as a prudential regulator is to make sure that the financial institutions that we oversee have appropriate regulatory management frameworks and practices in place to be able to ensure that they're complying actively with whatever FINTRAC tells them that they should be doing and all of the regulatory requirements that they're subject to. So in a sense, like, we're not trying to occupy that space by duplicating regulation that already exists at that other order of government. The exception to that, well, it's not an exception, but just something that may be worth being aware of, is that coming out of the Cullen Commission in British Columbia, which obviously looked at a lot of the financial crimes that were occurring in the financial sector in BC, coming out of that, the provincial government decided to give BCFSA a new mandate over money services businesses. So, business, foreign exchange, payday, all those sorts of things. So we're still in the process. We have not actually received the regulations for that, for us to implement it. But what that will involve is us putting in place a licensing and registration regime with a suitability test for providers who offer those services. But again, even when we think about the requirements of that regime, they're not duplicating the FINTRAC requirements that those entities would already be subject to. They're trying to kind of augment them and create another sort of element of that regulatory environment that allows for positive outcomes to be produced for Canadians.
And I'll just add on to that in terms of the fact that the financial service institution that you're talking about, but let's take it one step further. And in our case, from the credit union side of things, it's the boards, right? There are boards behind all of these organizations, and we need to make sure that they have upped their game, so to speak, in terms of being more financially literate, being, proper board education to understand the threats that are out there. Because at the end of the day, in our case, credit unions are different. We have the large ones, which, for the most part, their boards are, set up in an appropriate manner. But you got small town boards where it's basically friends and family. We need to eliminate that. We need to make sure that those board members have diversity of thought and be able to have diversity of, and more importantly, expertise and skills. So I think that is a very major part behind this, where we need to ensure for those credit unions in particular that they have an understanding and a board that understands what's going on and up to date with what's happening in the speed.
We often say, I say at BCFSA, we have first line, second line, third line, and then we say to the boards, and you're the end of the line. So just so you all feel like you have a good sense of like how things are being managed in your organizations, make sure you remember that. In fact, I was mentioning to some colleagues today as well too, one of the things that I don't know if it surprised me, but what I noted when I joined the BCFSA is that there wasn't a corporate governance guideline. Now that doesn't mean that we weren't asking questions about corporate governance in the context of our ongoing supervision. It was just we didn't have any formalized document where boards and chairs and officers could refer to make sure that they're more or less focused on the right things. and we'll be changing that in the coming months. We'll be issuing something which is not going to be like revelatory or anything like that, but that will reinforce our expectations of directors and boards when it comes to risk management, including for financial crimes.
Yeah, it's similar application in securities. So governance requirements, disclosures for reporting issuers, governance requirements for registrants, operational controls, SOC reports, policies and procedures, all of that for registrants, know your client, know your product rules. And a lot of the registrants we deal with, particularly crypto asset trading platforms, they are MSBs. You know, the investment dealers are MSBs. There's reporting to us, data reporting. There's compliance reviews, oversight. I do think that there are some gaps in the tech or the regulatory ecosystem, particularly with respect to crypto. So I like to point this out. I teach a fintech class, and I like to always ask my students, how many of you own crypto? And increasingly I'm getting, over 50% of them, and I'll say, what do you do for your private key storage? Here's what I do. And they'll look at me like I'm speaking some strange language, and they say, I just go into my Wealthsimple account or into my Coinbase account. I don't know what you're talking about. What is this private key? And I say, okay, what do you actually own? What is it that you actually own? And then that catalyzes the discussion around our jurisdictional take around crypto and how really effectively the jurisdiction in the securities realm around crypto is in relation to intermediaries, which is kind of paradoxical since crypto was designed to disintermediate intermediaries, but it's ubiquitous intermediation at this point. But that's where the regulatory parameters are on things that are operating in a similar fashion to traditional financial institutions, either providing custody or onboarding or providing some type of a financial service or a marketplace built through a tech stack. Well, here's where the gap is, okay? There's no regulatory parameters around self-custody wallets. And you can go onto a crypto asset trading platform, and our analytics team works with our enforcement team on this. There's crypto fraud and scammers out there who will get people to go into their crypto asset trading platform account and send it off account into a self-custody wallet. And there's not, and so even though there's screenings and parameters we put into place, there's the ability for people to self-help and move it into self-custody. Once it's into self-custody, then it's an entirely different world. And we don't have clear ways, and that's where a lot of the money laundering will happen. It's getting it off platform, getting it outside of the FinTrack reporting into the self-custody sphere. That's a very hard one to police. That's a very hard one to track. And you have private, market, you have chain analysis, and you have TRM, and you have these other entities that can help with that kind of tracing. And law enforcement's getting pretty good at it. Like when people say, well, crypto's anonymous. Not really. It's fairly pseudo-anonymous. There's ways to trace it. It does take some time, and you are sometimes playing whack-a-mole, but the irony is that what allows us to regulate crypto effectively is that people aren't using crypto how it was meant to be used, which is pure peer-to-peer, pure self-custody. People are relying on intermediaries.
Mm-hmm. So you know what? I didn't realize how quickly time is running, but in terms of we have talked a lot about technology, but I'm going to come back to it because you don't go to any board meetings or analyst call where people are talking about technology, innovation, and AI. And obviously all of you want to make sure that you are fostering innovation. You want to make sure that the companies that you regulate are thriving. But when it comes to technology and AI, is there anything else you want to add? Are there any frameworks that you are looking at in terms of making sure how you're balancing that risk versus innovation? Anything that we haven't touched that you want to maybe briefly mention?
Yeah, no, I will just say, I say this in a bit of a jest. I've only been here for 6 months, and it was only literally 3 months ago I learned about this internally, which is we have a platform, testing and learning. So basically it's a sandbox where any of the regulated entities have something new they want to bring out to the marketplace, they can bring to us, be in a tested environment, see how it works, make sure it meets our requirements, consumer protection, everything of that nature before it goes out publicly. So I think that's something that we have to do more to let the market know about, but it's definitely an opportunity where those have new ideas, new thoughts, innovation, so to speak, could come to us in advance, use our test and learn environment, and then come out with a result. We get the data for them, and then see how they can be implemented in the future without less fear of concern and or risk. So something that I recently learned about, and it's amazing that we're doing this. So, and I'm definitely just keeping up to date with that now, hearing how much more people are learning about it and are coming to us. So it's something I'm really proud of my team and what they're working on.
Yeah, I guess we are in an interesting space where we want companies to innovate. Hopefully it leads to less cost for the consumers and better experience, but at the same time you want to make sure that it's done in a controlled fashion.
Absolutely.
Anything else, Tolga?
Yeah,
Ryan,
I'll just jump in. So I like to bifurcate this question, and I think about this all the time actually, from the regulatory ecosystem to the regulated ecosystem, and I have the unique privilege of interacting in both. So as the CSA Financial Innovation Hub chair, we are designing testing environments for the regulated ecosystem, and we're considering type of the application of new technologies, and that, which includes both kind of more open discussion frameworks like the CSA Collaboratory, but still bounded standardized testing environments like the former CSA Sandbox. We still have, and we're developing those type of mechanisms too, and we've always had the exemptive relief ability within the CSA. So within the regulated ecosystem, we're thinking both of the positive, the encouragement and fostering of positive technological changes, which lead to better financial products and more financial inclusion and better risk analysis and et cetera, but also the deleterious effects, things like deep fakes and investor harm and other things. So those two lines are happening as well. But we don't talk actually a lot about the regulatory ecosystem, which I think is an interesting one too. And in my group, we are engaging in this. So this includes like, how do regulators use AI, for example? Like, what are our parameters? We're subject to administrative law constraints. We're subject to particularized privacy requirements. We have to ensure that we have, proper data governance controls, and we are relying on data. The data that we are relying on has integrity. Also, what about just the regulators' attempts to design tech themselves? One of the things under my division that we've recently launched at the ASC is a tech prototyping internal hub. So I have data scientists working with full stack developers within my division that are going out to the other divisions asking corporate finance and market reg and enforcement, what are some problems that you have that we just can't go buy a solution off the shelf? And then we're taking that in, we're running it on an agile project management basis, and we're trying to quickly solve and learn problems where we're building the tech internally ourselves. And so that's something that I think is kind of interesting for regulators to think about, is like, how do we engage with, utilize, and integrate tech within our ecosystem as well?
So I'll say two things. I'm always very happy to admit where, in my view as a regulator, we're posing an impediment to something. But I actually don't think, when it comes to innovation, especially technological innovation, that BCFSA is an impediment. I just think people aren't doing it. Like, there's nothing stopping it. The tech stacks, like if you talk to the financial institutions that we oversee, they have, and this isn't, I'm not critical. I mean, maybe it is a bit critical in a sense. I think that they would agree. They have a lot of work to do when it comes to actually developing an innovative tech stack, using technology to transform how they're doing their work. And there's nothing we have in place that stops them from doing that currently. But, and this is an important but, as we've discussed internally within our own organization, though we don't impose any impediments, are we asking these questions as part of our ongoing supervision? So we're concerned about business model risk. There is a business model risk if you are not developing technological solutions to maintain your client base and give them the services that you want. And we can't have confidence then that you actually have a sustainable business model that is going to allow you to continue to operate in a risk-appropriate fashion. So one of the things we've been thinking about is, do we need to ask more questions? Like, what are you doing to update your tech stack? Like, how are you thinking about this? What talent have you brought on to help you with this? How are you collaborating with others? How are you making sure that how you're thinking about technological innovation aligns with what you want to achieve as an organization? It sounds a little bit like strategy, I get it, but it also can be that nudge perhaps that financial institutions benefit from in kind of pushing them in this direction of innovation.
Very interesting. back to audience. Anything you want to ask? Sure.
Here, just have a couple of minutes.
Yeah, I'll be quick, and it's really to anyone on the panel. You've talked about organizational structure and adjusting because the market's changing and the demands on the regulator are changing. I'm curious about the process by which regulators function, the consultation, the getting input. I'm really intrigued by the FCA, which has used design thinking into their approach to open finance. And I'm wondering whether any of you or some of you have considered that, like, we get the same result in what we do because we do the same thing the same way, trying to change it differently. They're taking a page from the private sector and design thinking. The end user experience is so critical in financial services.
I am, for sure. I've had conversations with Colin Payne, the Chief Innovation Officer of the FCA. We hosted the GFIN annual general meeting just a couple months ago in Alberta, and I'm familiar with a lot of it. They're doing some really interesting, kind of really pro. He said it's not even like, he told me, we're not tech agnostic, we're tech forward. We're moving forward. Historically, regulators said, well, we're tech agnostic. They're tech forward within this design thinking framework about the end user experience and integrating kind of the regulatory understandings within that. And that's part of the ethos that is underlying this collaboratory that we've launched with the CSA, because we've heard quite a bit, and academics have talked about this for a long time. Like we have the notice and comment type dynamic, right? Put out consultation papers, we get the feedback, a lot of it's drafted by Bay Street lawyers, and it's kind of the same process, but there's administrative law constraints that require us to do those types of things for actual rule changes. But we have heard, and at least I've heard on the fintech side, the innovation side, that can you guys move faster? Can you get feedback faster? Even on the testing environments, does it have to be unilateral in a way where an individual has to make an exemptive relief application? Then you got to figure out what to do. What are some ways that we can engage better and faster in the design thinking? And so, for example, this data portability test that we just launched in the collaboratory is integrating some of those learnings, where instead of just putting up a testing space, a sandbox, we're engaging in very, very detailed discussions, not just through a formalized comment process, but I literally got to fly right back to Calgary tonight because we're running a big data portability forum. We've got 100 plus people registered, institutions registered online. We're getting into very, very detailed, live, real-time questions. It's almost like the equivalent of like having 4 or 5 notice and comment periods within a hyphenated period of time that we're gathering the data that allows us to inform the testing environments themselves. So like we're doing what we can subject to the administrative law constraints of rule changes as a statutory agency.
I love the question, Jordan, because I love questions that like make you think with a little bit more intention about something that you do. And so my answer to your question at first is, we're not actually doing that much different. And it's a great question to be asking us. On the other hand, when I started to reflect on actually how we are going about, like how we think about new guidelines or like issuing a regulatory statement, like traditionally, right? Like regulators are very cookie cutter and structured. It's like we draft the guideline, we go through our internal process, we issue it for consultation, we issue a what we heard report, and then we pass it. Perhaps notwithstanding anything that we said in the what we heard report or what we heard back anyway, we still issue it and kind of move forward, and then there's an implementation period and stuff like that. And I would say in the last 6 or 7 months, that was very much the approach when I came to BCFSA. I'm familiar with it, right? Like this is the OSFI approach, right? Of like how you roll out new norms that you expect. And though we haven't been doing it perhaps with the level of kind of precision that your question asks, one of the things that we've been doing internally is we've been really asking ourselves, like, do we actually need to, like, I get it that it's so comforting to turn off your mind and be like, this is our process and this is how it happens and these are the steps we take. But my kind of message has been like, just get in there and like, and we're a small jurisdiction, right? We know a lot of people, we can talk to people, we're willing to take on a little bit more risk as well too, in terms of concerns about like quote unquote directed consultations, like going to industry, getting some feedback, making some adjustments. We're also dealing primarily in the cooperative space, right? So it's like these are credit unions, they're not trillion-dollar banks, for example. So maybe the dynamic is a little bit different too. But the message is kind of like that we've been doing is like kind of get in there, figure out what works, talk to people, Like, it doesn't all have to be perfect. Sometimes a regulatory instrument is not the solution. Just figure it out, you know? And it's introducing design thinking, I think, into the mix and other approaches with a little bit more structure and intentionality could be a really interesting way to continue to advance some of those efforts we've been deploying so far.
Thank you.
I mean, well, Jordan's my executive
Yeah,
vice
I know.
president, so I don't have to
Was that
answer.
a plan?
I don't have to answer.
I think we can
But
skip that.
he has said things that are, for us to think about internally ourselves. So
Yeah.
let's leave it at that.
That's good. And again, we could have gone on for another, hour, but I'm getting signals saying we need to end. I know there's another session that we need to go to. So again, I really want to thank all of you. We are so fortunate in Canada that we have, that we can have dialogues like this, engage in a good discussion. So again, Dexter, Tolga, and Ryan, thank you so much. Thank you.
Thank you.
Thank you.